Hey, so the question becomes, what's the point of having business credit scores if lenders still check my personal credit to qualify me for any type of business funding? Well, that's a good question. We're going to dive right into it. But before we do, my name is London and I help new LLCs, new business owners start, grow, and scale their business by using business credit. And if you're new to my YouTube channel, it's called London Business as Usual. Make sure you subscribe, make sure you like, and make sure you hit that notification bell if you like the content that I am providing for you today. Now, let's jump right into it. So the question becomes, what's the point of having a business credit score if lenders still going to check your personal credit, right? I thought we want to keep our business credit profile separate from my personal credit profile. And we do, and you're absolutely right. But here's the reality of the situation. Most new LLCs, most new small business owners, business could not stand by itself, meaning you're missing the basic fundamentals of having a good business credit profile and a good business structure. For example, let's take your business age. Most new LLCs are only in business under 2 years. Lenders like to see 2 years or more when it comes to your business credit profile or when it comes to your business in general. Some of their products, you can't even get qualified if your business haven't been established more than 2 years. On paper, what do I mean by that? Well, you have to have a LLC, S Corp, or some type of separate entity filed with your Secretary of State. When they look up your business, that's part of properly structuring your business or building a strong, fundable foundation for your business. So make sure that you renew your license, or I would say your articles or organization, every single year. You wouldn't believe how many new LLCs or small business owners forget to do this most fundamental things as far as renewing a license every single year. So you got to make sure you do that. Number two, in order to be in business for longevity, you have to make sure you have a business checking account. Do you know most lenders, most creditors out there do not deem your business as being established if you don't have a business checking account? No matter if you are already registered with your Secretary of State. So one of the most fundamental things you can do as a small business owner, please make sure you have a business checking account. So that determines the longevity, AKA your business age of your company, by having a LLC, something like an LLC established with the Secretary of State, and also a business checking account. So don't close your business checking account, renew your LLC to get that business age. And you want to make sure 2 years or older. Now, can you get business funding without being 2 years in business? Absolutely. You can get massive amounts. I mean, you can get over $100,000 in business funding with being a brand new business. I'm talking about your business was just incorporated like yesterday. So you can definitely get funding. There's definitely options for you out there. Now, are you limited somewhat? Sort of. You're definitely limited somewhat if you haven't been in business for 2 years, but there's still opportunity for you. Now, business age is very important. Now, the second thing is, as far as you lack credit history, AKA payment history, right? Lenders want to see that you're paying your bills on time and over a period of time when it comes to your business. So if you haven't shown that you've been paying your bills, let's say for 2 years or more, so you lack the payment history when it comes to qualifying you for your business to stand by itself. So we want to make sure that we continue to pay our bills on time over the period of time so we can build up that good payment history. Another key factor I would say, as far as when it comes to your business standing by itself without you personal guarantee. Now, what is personal guarantee? Let's break this down because most people probably don't know what that is. That means where you're going to essentially co-sign for your business. Right. So the reason why they want you to co-sign for your business, just like you co-sign for someone for a car, you're personal reliable. You're securing a loan if that loan doesn't go through. They could come after your personal assets, meaning you're personally responsible for making payments on that particular loan. Now, that's a personal guarantee. So you're securing the loan based off your personal assets and not just the business. That's what a personal guarantee is. So the other key basic factor that your business is probably missing, why it can't stand alone by itself, why you have to do something like a personal guarantee, is your business is probably not financially stable. You lack financial history, which means the trade line that's reported on your credit report is insufficient. So which means Maybe your business credit profile consists of a lot of vendors and supplier trade lines, meaning net 30 accounts. Lenders and creditors can care less about your net 30 accounts. I talk about this all the time. So you want to make sure that you're building financial trade lines, such as secure business credit cards, unsecured business credit cards, business lines of credit, auto loans, lease loans. These are all examples of financial trade lines that these lenders and creditors actually care about. Why? Because when you get financial trade lines, it proves that you can manage debt. Your business can manage debt. So we want to make sure we get financial trade lines. So when you're out there getting a whole bunch of vendor and supplier trade lines, you haven't proven that you can manage debt. So we definitely want to make sure that we prove to these lenders that we can manage debt. That's going to improve our financial history, which is really, really important. So yeah, you lack financial history when it comes to your business standing alone by itself. Now, the longer you are in business, the more you build a rapport with that financial institution, whether it's a Chase Bank, whether it's a regional bank, like a PNC bank, whether it's a small credit union or a community bank inside your city that you live in, you're building up that rapport, you're building that relationship with these financial institutions. So eventually your business might be stable enough to stand by itself and you don't have the personal guarantee. But we have to make sure, particularly we have to make sure that our financials is important, right? File our taxes, making sure we do tax returns, making sure we have P&L statements, cash flow statements, making sure we have our bank statements, right? Making sure that we have balance sheets and things of that nature. So we're keeping up with our financial records so eventually our business can stand alone. Now, that may take some time. Most lenders these days still require you to do a PG unless you're making millions of dollars or you've been in business for 5 to 10 years. So also keep that in mind. You might also always have to do a PG. But the great thing about a PG, you're still keeping your personal and your business separate. That's one of the biggest misconceptions out there. Hey, I don't want the personal guarantee because I want to keep my business and my personal separate. Well, that's exactly what you're doing. Why? Because those business accounts do not report on your personal credit profile unless you default on the loan. That's the only time it reports on your personal credit profile. So yeah, that's the video. Make sure you guys like, make sure you guys subscribe. I hope this was very insightful and I hope you learned something today. See you on the next video.